gives me great pleasure to bring on board investor and best-selling author Ruchir Sharma to talk about his new book, The 10 Rules of Successful Nations. Ruchir's ability to connect the dots and to really navigate the past with some big trends is quite extraordinary. In the past also, in his various books and on various forums, Ruchir has argued and articulated that what really makes unknown to unforgettable and what really could be a cause of crash landing for best and some of the strongest countries. Ruchir, fantastic to have you back on ET Now. Thank you for joining us. First I'm hoping that everything is fine with you, your friends and your colleagues.
Yes, thanks Nikunj. Great to be back on your show, and this book has sort of come at that time where looking at rules, I think, has become even more critical because there's so much hearsay and so many theories floating around that to stay focused for me by focusing on a framework, I think has become even more critical.
Okay, great. So let me first understand the worldview from Ruchir Sharma's eyes. Because of the pandemic, what do you think will be the shape of the world? What will revive, what will survive, and what will flourish?
I'll make a couple of points here, Nikunj, at the outset. One, that let's also put the pandemic in its proper context, which is that this is possibly the third major pandemic over the last century. It could be the biggest since the Spanish flu of 1918 to 1919. And the point I'll make is that those pandemics at that point of time were very lethal, debilitating for the global economy, and yet very soon after those pandemics were over, very little was remembered about those episodes. The 1918-1919 Spanish flu, which many people now have been brushing up their history to learn more about, was followed by the roaring 20s, the big boom in the global economy. Similarly, if you look at the 1957-58 Asian flu, or what happened in 68 with the Hong Kong flu, the casualties in both those flus were greater, especially the share of the population, than what we have had today. And yet, very few people who have even lived through those episodes remember what happened during those two episodes. So to put this in context, that we are living in this extraordinary moment, it feels as if this is all that there is, and how the world is going to be reshaped by these episodes. And my suggestion here is to keep history in perspective and to recall what happened in those episodes. In fact, there's a great Russian proverb on this, which is that ignore history and you lose an eye, you stare at it too hard and you lose both. So keep a healthy dose of history in mind, but also remember that patterns tend to change and we will move on. So I'm not looking at this pandemic as something which is going to fundamentally alter the world over the next 5 or 10 years. Having said that, I think that there is one thing about this pandemic which we have seen so far. That is that many of the trends that were in place before the pandemic really broke out early this year, those trends have been further accelerated by this crisis. So those trends were anyway going to play out, let's say like deglobalization or digitization. Those are trends that I was looking to play out over the next 5, 7, 10 years. Instead, they've been telescoped in time and possibly played out in 5 or 7 months. So I'd say that those for me are the two defining features of this pandemic. History teaches us that do not get too carried away by the moment. And the second lesson is that many of the trends that were already in place have merely been accelerated by this extraordinary crisis.
Ruchir, the factors which you have maintained in the past and you've mentioned in the book, they don't belong to a particular template. They are based on your understanding, your experience, empirical evidence and data which you have back tested. But before we get into specifics, I just want to bring this point out for the benefit of our viewers. Whatever assumptions, Ruchir, which have been made in the past were also centered around an interest rate cycle. But currently the interest rate cycle is very different and the liquidity scenario is very different. So don't you think assumptions which have worked in the past now may not play out largely because of this one single factor, interest rates?
No, Nikunj, if you really look at it, this is a point that I've been making now for many years, if not decades, which is that we are in an era of progressively easier and easier money. And this concept of moral hazard has been almost kicked out of the financial markets. So talking about interest rates, I think a seminal moment was 1987, that we had the big stock market crash of 1987. And that was really one of the first times that a central bank explicitly intervened to prop up the market. So if you recall, after the stock market crash of 87 in October of that year, Greenspan cut interest rates quite aggressively. And since then, we have had this pattern where every time there is a crisis, you end up getting lower and lower interest rates, with central banks rushing to rescue. So I think that this era of lower and lower interest rates, much more intervention by central banks, is something that we have seen since the 1980s, and that just took another leap forward following this crisis and the extraordinary amount of stimulus that central banks have put to work. So I don't think that this is something which is a new phenomenon. This phenomenon of asset prices being inflated by lower and lower interest rates and more central bank liquidity and greater rescues by governments in general is a pattern that has now been on for many decades.
I'm going to quote a line from your book and something which I've underlined, which in a sense has stayed with me. The question to ask is never what will the world look like if the current trends hold. It is rather what will happen if the normal patterns hold and cycles they continue to turn. So let's talk about it. What are you trying to bring out here?
Yeah, so the point that I'm trying to make here, Nikunj, is that we get very caught up in the moment, and the consistent pattern that I have seen over the last few decades is that every decade there is some new theme, some new pattern which emerges, and the last decade those very patterns that were enticing everybody all of a sudden look out of fashion. This is a consistent pattern that I've seen over the last few decades. So currently we are all in thrall of the large tech companies and think that the virtual economy is bound to take over the world and technology is all that matters. And I think this very lopsided view of the world is possibly overdone. I like the definition of a bubble, which is that it's a good idea taken too far. And so that's what my point is, that a decade ago we couldn't get enough of emerging markets. BRICS was the hottest theme in the world. In India too, as recently as 2010, we thought 8% economic growth was our birthright. And look where we are today. So that's what I try and say, that yes, you have cycles, but cycles have a life. Most trends tend to peter out within a decade. And so as we look at this decade, what seems very hot now is extremely unlikely to be hot by the time this decade rolls off.
Right. Ruchir, in the book and specifically on various forums, you've mentioned that one should be wary of the golden decade for America. America's market cap to GDP, their stock market, their profitability to GDP, everything is at a peak. But given that the pandemic has in a sense made America perhaps more resilient because of their tech dominance, do you think the peak America theme which you argued and which you mean making may not play out as anticipated as per the script?
Right. So first, as you know, that over the last decade, I've been very optimistic on America. In fact, the first book I came out with in early 2012, the main thesis of that book was that I was in search of all these breakout nations in the developing world, but the true breakout nation was going to be America, given its tech prowess. One of my biggest regrets in life is that I did not organize my investing career more in accordance with what I had written in Breakout Nations, where I broadly said that the emerging markets are overhyped, the commodity boom is very long in the tooth, and it's really the tech prowess and America that is likely to lead. So that's roughly, I think, how things played out over the last decade. So here we are after an incredible boom in America. The stock market performance of America, the dollar performance, and even the economic performance over the last decade have been exceptional. The point I make, or I've been making some of the forums over the last few months, particularly before the pandemic broke out, was that America is looking very extended versus the rest of the world in both financial and in economic terms. Now, following the pandemic, I think that that theory looks only more valid. Yeah, in the short term, because of America's tech prowess, we have seen that the American stock market has been very resilient. The tech companies in America continue to generate extraordinary returns. But if I objectively look at the metrics that I mentioned in the book, America scores more mixed. In fact, it doesn't score well on many of those scores. It went into this crisis with a relatively high debt level, especially compared to other major powers such as Germany. Now, there's a lot of complacency in America that because they have the reserve currency, the dollar, they can afford to print their way out of trouble. They can afford to spend as much as they want. So I think that I'm always concerned when countries begin to get that complacent. Then we also have the phenomenon where in America today, the stock market compared to the rest of the world is at a 100-year high. So that is also looking very stretched. And then you have the extreme political polarization in America. And that is shown through in the handling of this pandemic, in that the performance of the American government, if you just look at the case load per million or the death rates per million, are relatively high in America compared to many other developed countries in the world. So all these things do not really reflect that well on America. Now this is coming from somebody, as you know, who's been very optimistic on America. And even as recently as this March, April, I wrote an essay for Foreign Affairs titled The Comeback Nation to just set the narrative correct, which is that America has a history of proving the pessimists wrong. It did so last decade as well when everybody had written off America. Even today, the narrative in a lot of the American press is one of American declinism. And I was saying that the last decade has been so good for America that the coming decade is not likely to be as good. So it's like, almost arguing something which is 2 steps removed from what the current narrative is.
So if Ruchir Sharma has to, let's say, plan his investment for this decade, how will he plan it? Because like you indicated that you did not plan your American investments, but this time I'm sure you would like to learn from your mistake and plan your investment for this decade. Where do you think the puck is going to move?
Yeah, so therefore I think that it is time to relook at emerging markets. I think that I've been quite skeptical of this asset class over the last decade or so, and been speaking about that. But I think that generally places like emerging markets and even Europe are looking much more attractive to me for the next 5 or 10 years, if we can afford to have that patience and that time horizon. And why do I say that? One, I think is very important is the US dollar, that typically these international investments tend to do much better in a weaker dollar environment. I think the dollar has made a very important turning point over the last few months. So the dollar has clearly peaked after an incredible run over the last decade. So I think that should generally help international investments, global stock markets outside the US do much better in a weaker dollar environment. I think then also the fact that in some of these emerging markets, the valuations are very cheap. And this is possibly the most provocative thing that I will say, which is that, as you know, that I've also been a long-term bear on commodities. And I think that commodities are setting up for a much better decade, given the amount of supply discipline, the rationalization of excess supply that's taken place in the commodity sphere after a very poor decade. So I think that investing in commodities for the first time is looking very attractive to me in many, many years. So that's where you have it. I'd like to put more of my money internationally in emerging markets, and I'm a backer of commodity investments which are looking so neglected today and so out of fashion.
Ruchir, the first part of your book is dedicated to population growth, something which you've argued and mentioned previously also. Now, if the population in the world is contracting, and if China is going through a slowdown, America is picking out, India is going through a slowdown, who will do heavy lifting? Because you need a large nation, a large country, a populous country to perhaps generate demand.
Yeah. So the point I make in the book is that the world's working age population, the growth rate in that has fallen from around 2% a year for much of post-World War II history to now as low as 1%. So that automatically means that the global economy is likely to grow at least 1 percentage point slower than where it has been growing over the last few decades. Remember, the two drivers of growth in equal measure. One is the number of people coming to work, and two, how productive they are. So one engine is now running at half steam compared to where it was for much of post-World War II history. So it just means that the global economy, which grew at a rate of, let's say, 4% on average, everything else unchanged, 3% becomes the baseline for the global economy in the years ahead. And then, of course, we have productivity, which we'll get into a bit later. Now, the question is that in this environment, we all have to revise down our growth expectations. So even countries like India, where the population growth rate was explosive in the 60s and 70s, the growth rates have slowed down. The working age population growth rate in India now is in fact dipping below 2% for the first time in possibly nearly a century. So this is a very big seminal shift that's going on, and something which is underappreciated, that the political narrative in countries like India is still very much on how to control the population growth, because that's the mindset we grew up in the 60s, 70s, and in the 80s, when population growth was very high. But now the population growth rate is slowing down across the world. There are nearly 50 countries in the world where the population growth rate, the working age population growth rate of people between the age of 15 and 64 entering the labor force is in fact contracting, as you mentioned at the outset. So this is a huge shift. In terms of who will do the heavy lifting, I think that once again, it's emerging markets, and countries like India still have a relatively better demographic profile, even if the growth has slowed down a lot, countries in Africa, Middle East. Now, what I do mention in the book is having a good demographic profile is a necessary but not a sufficient condition for generating high economic growth. Because these countries which have generated high economic growth in the past were able to use the demographic dividend and convert it into something, principally in East Asia. But in places like Middle East or in Africa, they were just not able to do that. Having a good demographic profile is a good starting point for generating high economic growth, but not a sufficient condition. And for there, we have to look at the other 9 rules, which tie in much more to productivity.
Okay, before I get into India, I want to refer back to a portion of the book where you mentioned why dollar matters, because dollar is still the currency of choice for global business and other transactions. What's your view on dollar? I mean, it's not that any reserve currency is permanent. British pound before World War II was the reserve currency. It changed to US dollar. Do you see a big change happening in US dollar as the reserve currency?
So if you look at economic history, the life of a reserve currency typically tends to be a century. This goes back to the 16th, 17th century when the Spanish rule, and then obviously the British pound being so dominant in the 19th century. So that's the average life of a reserve currency, because then the empire or that financial hegemon begins to get too complacent and runs out of steam, and something happens to cause the decline of that major financial empire. The US dollar has been the world's main reserve currency for a century now. So you can argue that on a very rough timeline, the dollar is also reaching a phase where it could possibly begin a decline. The only issue is that there is no clear alternative to the US dollar just now. So as a financial superpower, the dollar remains really powerful compared to the rest of the world. The share of America in the global economy today is just under 25%. Share of the dollar in the world's global foreign exchange reserves is close to 65%. So huge disconnect between America's economic power and its financial power, as indicated by the strength of the US dollar, the share of the US dollar in global FX reserves, and that 90% of all transactions in the world today involve the US dollar on one side. So extraordinary strength of the US dollar. Hard to see what's an alternative because the Chinese currency still is punching well below its weight because China has so many restrictions on its capital flows, and the trust that the international community has in that financial system is still not as high as the size of the Chinese economy. The euro remains under question because of all the fissures that keep showing up in Europe periodically. So you have the popularity of some marginal investments in the dollar, and the millennials in particular like the Bitcoin as the new alternative, but there is no real alternative to the dollar. So the best I can say is this, which I said a bit earlier in his show, that the dollar seems to have peaked out on a cyclical basis at least, that the dollar is very stretched, that even during the course of its reserve currency over the last century, the dollar has gone through cycles where it's been in an uptrend for 5-7 years and then it goes in a downtrend for 5-7 years. We've had a very strong uptrend over the last 5-7 years, and over the next 5 to 7 years I would expect to see some sort of a downtrend in the US dollar, given how expensive it is, how stretched it is, and the fact that the rest of the world to me looking like a better attractive investment opportunity than the US. But to call the end of the US dollar as a reserve currency is far, far too premature, because I just don't see the alternative apart from these marginal forces that are there, like gold and Bitcoin. So I don't see the end of the US dollar as a reserve currency, but I do see a cyclical phenomenon where, because the dollar is so expensive, and just like in the last 100 years of its dominance, it has gone through ups and downs, that we could be in a downward sloping cycle for the next few years.
There's again a great example what Ruchir has in his book, and I would encourage everyone to read it, page 7. The S&P has suffered 15% decline 12 times since 1965, and there were 5 times when a sharp decline was not followed by a recession, most recently 2011. And Ruchir, the reason why I'm bringing this up, and perhaps my last but one question, is that how should one read this kind of a surge in market capitalization which has got created in Amazon, Apple, Alphabet or Netflix? I mean, the market cap of some of these companies is greater than a couple of countries put together now.
Yeah, so I think that there is a bit of a bubble phenomenon in these so-called hyped up growth stocks, including these stocks that you mentioned, and that happens periodically, and I think that we are in one of those instances. I think that the moment interest rates begin to rise, particularly long-term interest rates, I think that this bubble will burst. The question is when. I think inflation in the global economy may come back quicker than what people think currently. Today, inflation expectations are very, very low, and so therefore you have very long-term interest rates. But I think it could, in the next couple of years, inflation could come back and it could prick this bubble. So I think that that this is a trend very long in the tooth. I personally would not be putting money in these very large cap tech stocks at this stage, even though in the middle of the last decade, I remember when I was first speaking about these acronyms coming into fashion, like FANG, very few people in India were aware of it, and now it's become common parlance. So I would keep away from that part of the market. On the other hand, I think that some of the more beaten down sectors such as commodities and even some places such as financials, I think that those to me are looking much more interesting around the world. Now, there are still spots in the virtual economy such as gaming that I would want to invest in, because I think that's where a lot of the future is moving. But some of these incumbents, these very large cap tech companies, I would be very wary of investing at this stage. So that's, I think, my cautionary tale as far as the overall market is concerned. But the market in general is doing what it's doing, which is that over time the market will keep churning. What appears like the complete truth today will end up changing a year or two from now. And I think that churn will continue. And what the stock market today is doing on an overall basis is telling us that this pandemic is unlikely to be a permanent phenomenon. It is a natural disaster that will come and go. And so therefore the stock market is taking a bit more sanguine view in general of this crisis than what the public mood and the media headlines are.
Now, Ruchir, just for the benefit of our viewers, Ruchir has always argued that don't look at India in isolation, always look at India as part of emerging market plus minus 1%. So Ruchir, what is your base number for emerging markets? I mean, what is the number beyond which you would say I'm surprised with EM growths? And what is that base number beyond we would say I'm disappointed with emerging market growth?
So I think emerging markets in general are unlikely to grow at a pace of more than 3 or 4% over the next decade. It just is that those expectations have been revised down a lot. Like the trend growth rate in Brazil, Russia now is, most people estimate at barely 2%. So those economies grow above 2%. I think that will end up surprising many people. So similarly, like in India's case, and countries that I say are in the per capita income of less than $5,000, a low base from which it is theoretically easier to grow faster. I think if the Indian economy grows at a pace of more than 5% from here, that will be a big surprise on the upside for me over the coming decade. So that's as far as emerging markets in general and India is concerned. I think for developed markets, including the United States, a growth rate of above 2% will be a big achievement. When Trump came to office, he boldly spoke about how he thinks the American economy should be growing at 4 or 5%. And despite all the tax cuts he did, the regulatory push he gave, the American economy has not been able to grow at a rate of more than 3% in any year over the last decade, including during his presidency. That just tells you how difficult the benchmark has become for achieving high economic growth, because population growth rate everywhere has slowed down, a major driver of economic growth, and productivity growth is also declining. So this new benchmark for economic success for me is the single most important mindset shift that we all need to make, including in India. This anchoring bias that we can keep growing at 7-8% and that should, sure, that's like a noble objective, but that is just not realistic given what's happening in the world today.
Ruchir, I'm not drawing you to political waters here, but a year from now, 2 years from now, when the world will look at March and April 2020 and the severity with which the lockdown was imposed by global governments, do you think that would be considered as a mistake, or that would be considered as the best thing to do to save lives?
It's very hard to say this, but I can say that I was pretty upfront about this in March itself when India implemented its lockdown. That my own view is the fact that a developing economy cannot afford to impose a draconian lockdown. And so in that regard, as far as India is concerned, I was all for the fact that we have to do something obviously, but in general I think lockdown has been far too stringent a policy. I think that as somebody made a statement that it's almost like using a hammer to swat a fly. That is because if this keeps moving so much, that's very difficult to try and achieve much through a lockdown. So and this is where so a lot of people also ask me this question that, why is India not implementing more stimulus? So this is where I find, and I'm particularly disappointed in the narrative in India, including amongst the liberals in India, where the popular recommendation is India should have a massive lockdown and then it should have massive stimulus to keep the economy going. And I think that this is where we just are so unrealistic about what India can do and what this government in particular can do given the state of its finances. So I think that as far as India is concerned, we have now finally course corrected and we are learning to live with this virus and taking whatever measures we can rather than going back into a lockdown kind of phase. I mean, some cities in India still kind of do that. And I think that therefore also there's, I think, too much focus and too much criticism of the central government as far as the lockdown policies are concerned, and not enough about that what's happening at the states as well, that the state governments, including the opposition governments, have often taken even more draconian measures as far as the lockdown is concerned. And this is a very troubling aspect to me about India, that this reflects a level of statism in India about, like we want state control, about the state to have these powers, and that does not sit well with me, and also because I think it's being very insensitive to the poor of this country, which is that they really cannot afford these lockdown policies. So I'd say that, but having done that, I think that the amount of stimulus that the government issued, I'm sympathetic to the fact that the government couldn't have done much more as far as the stimulus is concerned, given the very high public debt levels and the high fiscal deficit we began this crisis with. So in this way, I am in complete disagreement with many of the people here in India, including some of my liberal friends, who on one hand want something as authoritarian as a lockdown, and on the other hand, they just want the government to go out there and give massive stimulus and handouts and print their way out of trouble. And I think that is very bad advice, because India cannot afford to do that. And other developing countries, which are the right benchmark to look at this, which have tried to print their way out of trouble, have gotten into even more trouble. Turkey is a classic example. Even before that, the Argentina, Venezuelas of the world, which have tried irresponsible monetary policies, is that. So what the developed world can do, what the United States can do in terms of stimulus with a reserve currency is very different than what we in India can do.
Ruchir, I distinctly remember when we interacted, when you written your first book, The Rise and Fall of Nations. India that time also was in the middle, and now also India is in the middle. It's almost a decade and India's positioning has not gone higher. We would have loved to see it go higher, and thankfully it's not come lower. Why is that?
As I said, that because there are so many conflicting forces in India, that this old line about India that which have you like also there, that for every story about India there's a counter story. So some rule, the rules keep shifting. They're so dynamic, and therefore India continues to muddle along. That has always been our path and continues to be our path. That's because the reforms we undertake are in stops and starts. We tend to reform only when we have our back to the wall, though that's true of many emerging nations. So there's nothing which happens very decisive out here as well. We also have enough checks and balances which keep the bottom from falling out as far as the economy is concerned. We do have some responsible technocrats who come up and do the right thing. Even as far as this government is concerned, one thing I do give the credit the government to is that it's not sort of abandoned all fiscal caution and tried to print too much money and stoked more inflation. I think it's been quite responsible as far as inflation is concerned, even though there has been some pressure on the central bank at times to cut rates. So I'd say that it is just this sort of mindset maybe India has, which is that we just we are incrementalists, we do things at the margin, and so nothing changes that much over time, and you have some mix, some shift. So even today you have so much disappointment as far as the old economy is concerned and the debt levels in all the classic old economy sectors, and yet you have the rise of the new economy and the virtual economy that's taking place and empowering so many people, whether it's got to do with fintech or it's got to do with the internet connectivity. So this is India for you with a very large domestic market. There are always these forces at work. So that's what I said. When Breakout Nations came out, at that point in time, people asked me that, what do you think is the probability of India emerging as a breakout nation? At that point in time, I said, I don't think it's more than 50%. People were a bit flabbergasted because that time the India story was too hot. And today I feel very similarly that I think that the benchmark of growth has shifted. Now 5% is the new defining line for success. And I feel that India still has a 50-50 chance of being able to sustainably beat that.
Now there is a lovely chapter dedicated to hype and I would encourage our viewers to really go through it. It's got lots and lots of anecdotes and experience what Ruchir in a sense has understood through his travels, through his understanding and through his data crunching. Ruchir, this book has really poured in a lot of your experience. So if you have to take the clock back and perhaps talk about 2 or 3 things which in your journey as an author, as an investor, as a traveler, which you think has not changed at all. I mean, those things keep on recurring again and again. It's just that we choose to ignore them.
Yeah, Nikunj, I began my career in a way as a kid as a writer, writing columns for newspapers such as the Economic Times back in the early 1990s. And what I feel there, so in a way I wear 2 hats, as you know. One is as an investor, one as a writer. And a lot of the people that I've hung out with, particularly when I was based in India in the 90s, were journalists and writers. And there's one thing which I can say that I always feel, which is that I feel that the market is always ahead of what the consensus and what the, where journalists and writers are. That is, and where like even experts are. And that's something which I get into the book as well, that journalists or even economists, if there's ever a conflict between what the message is from the market and what the message is from journalists or economists, always heed the message from the market. Not that the market is infallible and always correct, but it has a much better sixth sense given the collective intelligence compared to economists and journalists. So this is coming from somebody who grew up as a writer and whose best friends are journalists. So that is, I'd say, one of the recurring trends for me over the years that I've seen. And so therefore in the hype chapter, what I systematically show is that once a big economic trend makes it to the cover of a popular global magazine, it is quite likely that the trend is very mature and that the trend is about to turn, because most trends don't last, economic trends don't last forever. So that's a consistent finding I found, and that is something I use the Time magazine as an example of that every time Time magazine put a country on its cover in a very glorified way, you knew that country was about to get complacent and the trend was about to turn for it. On the other hand, if a magazine like Time was very downbeat on a country, that sowed the seeds of, let's say, some sort of a revival, because that's also when you end up getting reforms. So I think that it's having this, like broad contrarian thinking over time, but not being contrarian for the sake of being contrarian, but understanding that if you take a contrarian view and knowing where you're in the cycle is very critical. And that's what really I think investing is about. So as I try and toggle this life between an investor and a writer, that's one very key lesson that I learned. And the second thing is that I know this is very strange to say this in the midst of a pandemic, that there is no substitute for traveling to a country and immersing yourself in that country's culture, because you never know what you will end up picking up. So I always find I learn the most about a country by spending at least a week out there, and that shapes my experiences over time. And even this book, many of the rules in this book have really come about because of something I picked up on the ground while traveling in a country and then went back and tested it to find. One example I'll give here, that I was in Thailand, this is about 15 years ago or so, and it kept occurring to me that why does Thailand have so much civil unrest and strife? And one thing someone pointed out to me was that the city of Bangkok, there's so much power concentrated there that the population size of Bangkok is nearly 10 times larger than the second largest city in Thailand, and the Bangkok area alone accounts for 40% of the entire Thai economy's GDP. So I went back and tested that is there something to this, and I found a very consistent pattern, which is that successful nations typically tend to have many successful cities and not too much wealth is concentrated in just one city. So like in these economies and countries of the size of Thailand with a population of whatever, about 70, 80 million people, you need multiple cities to come, and a rule I formed was that the ratio of the population between the leading city or cities and the second tier cities should not be greater than 3:1. And wherever it's greater than 3:1, you're likely to get this social unrest kind of fault line between too much power being concentrated in one city and the rest of the country feeling left out of the decision-making process.
There's again a great example what Ruchir has in his book, and I would encourage everyone to read it, page 7. The S&P has suffered 15% decline 12 times since 1965, and there were 5 times when a sharp decline was not followed by a recession, most recently 2011. And Ruchir, the reason why I'm bringing this up, and perhaps my last but one question, is that how should one read this kind of a surge in market capitalization which has got created in Amazon, Apple, Alphabet or Netflix? I mean, the market cap of some of these companies is greater than a couple of countries put together now.
Yeah, so I think that there is a bit of a bubble phenomenon in these so-called hyped up growth stocks, including these stocks that you mentioned, and that happens periodically, and I think that we are in one of those instances. I think that the moment interest rates begin to rise, particularly long-term interest rates, I think that this bubble will burst. The question is when. I think inflation in the global economy may come back quicker than what people think currently. Today, inflation expectations are very, very low, and so therefore you have very long-term interest rates. But I think it could, in the next couple of years, inflation could come back and it could prick this bubble. So I think that that this is a trend very long in the tooth. I personally would not be putting money in these very large cap tech stocks at this stage, even though in the middle of the last decade, I remember when I was first speaking about these acronyms coming into fashion, like FANG, very few people in India were aware of it, and now it's become common parlance. So I would keep away from that part of the market. On the other hand, I think that some of the more beaten down sectors such as commodities and even some places such as financials, I think that those to me are looking much more interesting around the world. Now, there are still spots in the virtual economy such as gaming that I would want to invest in, because I think that's where a lot of the future is moving. But some of these incumbents, these very large cap tech companies, I would be very wary of investing at this stage. So that's, I think, my cautionary tale as far as the overall market is concerned. But the market in general is doing what it's doing, which is that over time the market will keep churning. What appears like the complete truth today will end up changing a year or two from now, and I think that that churn will continue. And what the stock market today is doing on an overall basis is telling us that this pandemic is unlikely to be a permanent phenomenon. It is a natural disaster that will come and go, and so therefore the stock market is taking a bit more sanguine view in general of this crisis than what the public mood and the media headlines are.
Well, Ruchir, really appreciate your time. Thank you very much for your wonderful insights. It's a rarity to get you on TV, but every time when you open your mouth and you give time to us, I mean, it's so wonderful to get your insights. Well, Ruchir's new book has made on my desk. It's part of my library. In fact, his books, all of them are part of my library. So thank you, Ruchir, for writing this wonderful book at a time when the world definitely needs to understand the framework in this pandemic world.
Pleasure, Nikunj. Always enjoy talking to you. Thank you.
Thank you very much, sir. Went off very, very well today.